Hello and welcome to our session today for GTA Live, which is our bi-weekly clinic for our business owner clients to discuss any kind of hot topics on business matters on the team at GTA. So today we're going to talk about MTD ITSA, and honestly, that's nothing to do with sushi. It's to do with making tax digital for income tax self-assessment. So we're going to try and liven up the subject a little bit because it's coming, it's inevitable, and it's going to be a huge change for anyone with income over a certain level having to do their personal tax, and obviously how we do it for you. So over to James Plant, who's going to let us know a little bit more about what MTD ITSA is.
So, whereas in the past we've been able to have a luxurious time of filing people's information, the intention now is that if your business or property income is over £50,000 from the 6th of April 2026, your records will have to be filed digitally. So quite straightforward. So this is a quarterly report. So every 3 months, you'll need to file some information with HMRC. And at the end of the year, they will expect that the sum total of the 3 months reportings each quarter add up to the annual results for the business. So it means that we have little time to actually, as we'd like to say at the moment, engineer or organize your results for your tax situation. So managing people's taxes will now have to be done on a quarterly basis. So that leads to a lot more work on our part, because we can't afford to get it wrong, because you can't amend things at the end of the year. And HMRC will ask questions if there are big variances between quarters.
This is huge, really, isn't it? Because we do a lot of planning with our clients based around year-end accounts and dividends that they may be taking from their companies. We're going to have to do that exercise, do we think, quarterly with them, or maybe a year ahead, this is what you expect your income to be? How will we navigate that with our clients?
That's something that we've got to work out how we're going to do. It's very difficult. From where we're sat at the moment, we have quite a reasonable amount of time to actually look at somebody's tax affairs after the year end and organise them in the best, and quite rightly, to mitigate any tax liability they might have. With this making tax digital, the impression that they're giving is that this will become something of the past that you won't be able to do. And although it's starting with people whose turnover or income is more than £50,000 in 2026, in 2027, that then drops to include everybody whose income is £30,000 or more. So that should pretty much cover most people, to make sure their records are as the best they can be. Gone will be the days of people who bring shoe boxes in, because they'll have to report every quarter. It'll have to be digital. You'll have to link your bank account to your software, and you'll have to process as many invoices as you can, as quickly and accurately as possible.
Come to us and actually talk to us about, I'd like to take the extra out of the business because I'm thinking of purchasing this, or I've got a personal commitment, and that planning the approach that we have with our clients, in that it's useful for us to know what your goals and objectives are in your personal life, so that we can reflect that back in terms of what you're going to need to draw out of the business. That's only a positive, isn't it? Plan.
Yes.
That's the key to this. And that is a win for us with the relationship with our clients. It means that we need to make ourselves more available to talk to them, not emails, but having phone calls, meetings, which is the approach that we wholly believe in anyway, is the best way to serve our clients.
Oh yes, the traditional accountants who like to produce some results at the end of somebody's financial year, several months after that year's ended, call them in, sit them down and say, this is what you did 3 months ago, 4 months ago, 5 months ago, 6 months ago when your year ended. Here's your tax bill, here's your accountancy bill. Nice to see you, nice, see you next year. Their days are going to be numbered, because they will be no help at all to people in this situation. So it is very important that accountants are involved in the business and the dreams and aspirations of the directors, etc., of that business, because those ideas change, directions change. 1 minute you might need a mortgage, and therefore you might need to maximize your income to justify a mortgage. At another point, you might be slightly older like myself, when you're looking to put more money into a pension. You don't have the requirement for cash outgoings anymore to fund a lifestyle. You're looking at funding your future retirement lifestyle. So therefore, you start to put money into a pension. And clients along the way will get married, they might get divorced, and they might get married again, they might have children. At each of these things, there is a different requirement for income. And by talking to us, we can help make that the most tax efficient income that we can.
So I'm just interested to hear from our own bright young things, Josh and Stu, as to what their thoughts and maybe ideas about this for us as a practice science, because obviously I've been ATA for 20 years now, and we did start out when there was a lot more paper, original books of entry and ledgers, and then we've obviously seen the changes. So sometimes we can be resistant to these changes, but I think embracing it's more our next generation of advisors coming through. What do they think about? But yeah, what are your thoughts on it?
A beneficial thing to do at the moment with a lot of our self-assessment people. We're essentially, unless they're part of a business and the company, we're essentially meeting them, once or twice a year to do their tax return. By implementing this essentially quarterly meeting, it allows us to essentially do a lot of the things that obviously James mentioned with regards to actually better planning on, John Smith wants a mortgage, but Debbie Jones is looking to retire, and it allows us essentially more visibility, and by forcing us as a practice to obviously engage quarterly, we can essentially see and provide more real-time information. That's my stance.
That our service package that we offer clients, that will say, like, yeah, it's including meeting or talking quarterly, submitting your figures quarterly. We need to redesign the whole service offering and ensure there's still a good element of value with what we're doing. That's what we're here for. That's a wrap. Thanks, guys. See you next time.